What's up everybody, welcome back to my channel, Earn It, Save and Invest It. And in this video, I'm going to go over my week 9 of my road to 100,000 or my 100K challenge. Now, I'm taking $7,354 and turning it into $100,000. I'm at week 9 right now, and so I'm going to go over exactly what I'm doing, what I did this week, did I do any purchases, did I do any sales, what I'm looking forward to in the next couple months of the stock market, and where I stand in my challenge. So go ahead and give a like and subscribe if you like all this content, and if you want to follow along with the same challenge, whether you start off with 10,000, 1,000, whatever it is. This is a long-term goal. This is about making consistent moves and constantly buying into the market, not trying to time the market at all. We're trying to have time in the market. So again, I'm just going to break down exactly where I stand right now. This is week 9 of my $100,000 challenge. Let's break it down. So as you can see, my road to 100K, I am at $8,853.93. That was down 4% just on Friday. Friday was a pretty rough day for most of us. As you can see, in the last week of all my stocks, of all my holdings, HIMS has performed the best at 8% over the last week. After that, Meta and Fubo, which you actually think about this. Think about that Fubo went on a massive run. It went up 20% at some point, right? In just one day, it went up 20%. In the last week, it's only up 1.9%. This is why trying to time the market and do all, it's just have time in the market, be consistent. Fubo went all the way up and I'm still going to be buying it, and now it went down again and I'm still going to be buying it. And it's okay when you know you have a good company and you're buying into it consistently. It's the drops. Like Friday was not a bad day for me in terms of my mental and emotional. I was like, okay, you're offering me Amazon at 8% discount? Okay, I'll take it. You know what I mean? So it's like when you always have money available to go in, even if it's $50 a week, you look at these dips as more opportunities, because especially it's not just having consistent buying, but it's having the time horizon. If you have a time horizon of next month, yeah, you're going to be stressed out because you have to make now that money back in the next month. If your time horizon is 5, 10, 20 years, you really start taking a different view of it. You look at it like this one red day means nothing. This one red month means nothing. In fact, the only thing it means is opportunity for discounts. Obviously when you have something like 2022 where it was like all 12 months were down, basically, right? You're looking at it, again, when you have a longer time horizon. If you are looking at, if you only have 5 years, that 1 year, that one bad year could be a little bit more stressful. But if you have a 10 to 20 year time frame, 1 year is not that bad, because you know these other years are going to get you right back to where you need to be. So that's why having a long time horizon, that's why I'm doing with this challenge. My point is, these are discounts. They're offering you discounts, buy them. And that's how I'm looking at it with this challenge. So since July 28th, this last week, I started at almost $8,700. I put in my $50 deposit. My investments went up $105, and so now I'm at $8,853. Compared to the indexes, I went up 1.2% over the last week, which, as you can see, again, it was a bad week for most of the market, and so all the indexes went down. The Russell, the S&P, the Nasdaq, the Dow, all went down. Nasdaq, surprisingly, didn't go down nearly as much. Usually the Nasdaq is the one where when the market falls, Nasdaq falls more. And then when the market goes up, Nasdaq goes up more. That's just typically how it is. And it's actually surprising to see that Nasdaq was the least hurt out of this whole week. I mean, there was a lot of big earnings, right? You'd say, okay, Amazon went down 8%, but they had really good earnings. Meta also went up, right? Google had good earnings. Apple even had good earnings. There was good earnings. So the overall market did go down. Some of the big players did, bring the market down a little bit, but there's also plenty of things that didn't go down nearly as much, and that's why the Nasdaq, I think, is holding up. The Russell 2000 obviously is more small caps, and it just got smashed. So I have a couple small caps. They said Fubo, right, went up 20% at some point and then lost all of its gains. So that's just how it is. From the start of this challenge, June 2nd of 2025 to August 2nd, which is the Sunday, I started off with $7,354. I have put in $450 so far. My investment change has been just over $1,000, and again, that puts me at $88.53. My rate of return compared to all the indexes, I'm clearly ahead of them at 13.72%. And as you can see again, over this time frame, all of them have gone up. And so which one has gone up the most? NASDAQ. So that's why it was a little surprising actually to see in this last week it went down the least. I would always assume that when the market falls, NASDAQ's going the most, and it didn't. So, but as you can see, I am 5% more than the NASDAQ since I started this challenge. And keep in mind, I had HIMS at, I believe, a 200% gains already when I started this. It was so already, so a lot of these gains are not from HIMS. I've actually had a lot of drops. As you can see, June 23rd, that's when HIMS dropped really majorly, with the Wegovy and the Novo Nordisk news. It dropped heavily. So that's when I lost a lot of some momentum. But at the same time, HIMS came back. As long as HIMS came back and all my other stocks performed well and did what they had to do, great. You can see I had this big boost over here July 21st. That was from Nike. That was the Nike big boost and went up about 20%. It's kind of stabled off since then, right? And then this is the Fubo, right? The Fubo, boom, and then it dropped. So, it is what it is. But I'm doing well. I'm doing better in 9 weeks. So it's about 2 months. I'm at 13%. That's okay. I haven't gone through any kind of time period of like a major downturn yet though, right? Like I had the HIMS crash, came back, right? The market had a rough day on Friday, but really the market's just been going up and up and up and up and up. So when the market does crash and correct, I will feel it harder. Instead of all of them being down, if Russell was actually down minus 5%, the NASDAQ minus 8%, you better believe mine is going to be minus 13% probably at that time. But because I will continuously buy during those discounted times, my rate of return coming out of it is going to be way better than the average. So that's how you have to do it. So here you can see week 9. If I want to get to my goal of $100,000, and yes, $100,000 in 10 years, right? It's a long way. Most, if not all, good things do not come easy. So if I want to do, and they don't come quick. The thing is, the lottery does, right? It comes quick, but usually it's not on your first time playing the lottery, right? You've probably played it 50, 100, 200 times, 300 times, whatever it is. You've played it enough to, I won. Unless, it's one of the billion, the really big ones, and everyone's just buying for their 10th time in their life. It's like, I have to get in on this, right? The point is, it's about long-term longevity. And I'm at week 9 right now. I have a long ways to go. I have 520 weeks total, right? In 10 years, there's 52 weeks a year. 10 years, 520 weeks. So I'm only at week 9. There's a lot that can happen. But it makes me excited because I feel like as long as I do the right thing, I feel like I can outperform. That's what I've been doing so far. And as long as I keep doing the right thing, keep consistently buying, and just staying with the good companies, making sure I'm doing my research, I think I can blow past the 100,000 in 520 weeks. Again, the goal, right, is 100,000 in 520 weeks. So I spaced it all out, or ChatGPT did. And in week 9, if I want to reach that goal, I should be at $8,046.13. I'm currently at $8,853.93. So I'm clearly about 10% ahead of where I need to be right now. Now, like I said, when there's a correction, a crash, anything like that, my account will go down more. I expect it to. I know it will, but it's okay. I'm just going to keep doing what I do because then, like I said, on the way out of those crashes, on the way out of those corrections, I will be having significant gains, amazing gains. So I'm looking forward to a correction. When you start investing like this, you look forward to corrections because you know that you will still be here on the other side. On the other end of it, you're still going to be here. So when this dip happens, like, bring it. So I know at some point my portfolio balance is going to dip under the balance goal. It's going to dip under it at some point, but then it's going to shoot right back up. Whether it's in a month, 6 months, in a year, doesn't matter, because I have a long-term horizon for this. I don't want to use this money in the next year or 5 years. This is money that I'm putting away for my future. And most of us, if you think about it, most of us are working to not work. How many of you are waking up, going to work because you passionately love your work? And if you do, awesome. That's amazing. Good for you. But most of us don't do that. I'm lucky enough that I do. I work in sports, media, and I love sports, so I get to edit sports all the time. I'm lucky. Most of us do not. So a lot of us are working to get the dollar to get to a point where we don't have to work anymore. Why are you working for that? Have your money work for you. Put your money in so that way you do what you have to do now, and then when the time comes, you're reaching your 50s, your 60s, you've now done what you had to do to put yourself in a position at that point to now just retire, right? And so it allows you to maybe do something that you kind of want to do more instead of having to like try to struggle and survive. You look at the long term, you're like, look, I'm going to sacrifice a little bit every day, every week, and I'm going to put this into my future. And that way I don't have to stress out. Because when you're working, you might be thinking, oh, I want a better job. I want to do something that I'm passionate about, or this and that. But, oh, wait, this one makes more money and this and that. If you set yourself, hey, I'm going to put this much every week into my account. It's going to grow to this much by the time I'm in my 50s and 60s. Cool. So then as long as I'm making this much amount and I'm investing this much, I can do something maybe a little bit more passionately. Maybe I can make a little bit less money because I'm not so stressed out about making it. If you are not saving now, and you're not investing now, you're gonna have that stress of like, oh, what do I do in my future? What do I do for my retirement? Because you're not doing anything now. You're not seeing how it can grow, especially if you're in your 20s and 30s, you're really starting the work. It's people, I'm sure, stressing out more in their 40s. If you're 45 years old, you have a 20-year horizon. 65 is when you can start. I think it's 62 or 63 actually, but you can take out of your IRA. That's almost 20 years. Just have the long-term look at it. I'm only at week 9. I have 520 weeks. I have way more than that. That's just for this little 10-year, thing that I got going on. But that's how you have to look at it. And invite the discounts, invite the corrections. So again, this is my portfolio. I'm doing pretty well in terms of overall. The last week got hit pretty hard, but HIMS is almost at that 200% again, which I like. I will be adding on to Fubo and Amazon. Those are my least weighted positions, and I really want to add to those. Fubo, I believe, is going to be an absolute grand slam. And then Amazon it's always been a grand slam. It's always been a great stock. And I believe so much heavily into the infrastructure, the cloud, the technology they even have. Their robo-taxi, right? The e-commerce. Amazon is huge. And I believe in their business and their future for at least the next 10 years. So I want to add more to Fubo and Amazon. So as you can see this week, I did buy Fubo and I bought Meta. I actually bought Meta. I bought $50 worth right before their earnings. I had a feeling they were going to smash earnings. I bought it at just under 700. And I believe it's still going to be a fine trade. I would like to add on to Meta. I only have really one share of it, a little bit, slightly over one share. But because I do want to be adding on to Fubo and Amazon more, I'll probably be staying away from Meta. But in terms of my large cap, my mega cap positions, Meta and Amazon are going to be my main ones. And then I bought Fubo. I bought 5 positions of that for $20. I don't know if you remember, but I didn't buy last week. I didn't buy as much. I sold off SMCI and EA, so I've had a little bit of a different cash influx of what's happened. And so I actually bought $70 this last week. I bought 5 of Fubo at $3.93, and then I bought Meta at $700. So the Fubo, again, at $3.93, it's down since then. I'm fine with that. I believe this is going to jump up to $20 eventually by the end of next year. Maybe in the middle of 2027, by 2020, it'll be like $20-$25. So I'm fine with it at $3.93, because again, next week I'll buy 5 more, so it's fine. But I did make those moves this week to add to my positions. So to talk about what could happen in the stock market coming up, I believe, because these are seasonally weak months, and it doesn't mean that just because historically it's been on the lower side of gains, if not taking losses, does not mean it's guaranteed it's going to happen this time around. But it was really crazy to see all these good earnings come out and see the stock prices go down. And there's times in the stock market where good news actually makes the stocks go down, and bad news actually makes the stocks go up. So we're kind of in a weird spot right now, because we're also dealing with the Fed funds rate and inflation and all this stuff, right? And it's one of those, if you're trying to get the Fed to lower their rate, you don't necessarily want the economy to look good. So when the economy and things look good, that means, well, the Fed might not want to lower their rate. So when you have the earnings looking so good, people are like, well, then is the Fed, people still think that the Fed is going to cut because of just where we are, where the Fed funds rate is and where inflation really is, the actual true inflation. Plus, there's just so much going on. The Fed is trying to say, oh, we're data dependent, but yet they're now saying, oh, well, the future might hold. So it's very up in the air right now. It's very cloudy. And so even though the good news about these companies beating earnings, still makes things confusing. So what I think is going to happen the next months, I think it's going to be some volatility, and most of it's going to be surrounded by Trump. Trump tariffs inject more uncertainty into global economy. As you know, we've been hit by tariffs, and that's always been in the news. This is something I just saw recently, is that U.S. consumers to face highest average effective tariff rate since 1934. The U.S. consumers will experience an overall average effective tariff rate of 18.3%, the highest since 1934. The tariffs are expected to cost U.S. households an average of $2,400 in 2025, with the levies disproportionately impacting clothes and Nonpartisan Research Center. The Nonpartisan Research Center. In the short run, consumers could see 40% higher shoe prices and 38% higher clothes prices. In the longer term, shoe prices are likely to be 19% higher, while clothing prices are likely to be 17% higher. That's pretty big. I'm a Nike holder. So what does that mean? Does that mean that the prices are going to be significantly higher? Their margins are going to go down, and they might be making less sales? Like, is that a possibility? I guess. That's also where our effective tariff rate is. All this stuff could be lowered. But I think this kind of stuff, because we're having this summertime, these 3 months are seasonally weak. There's a break that happens with all that. So I just feel like Trump's news, his statements, his comments, his announcements are going to run the market more than fundamentals and stuff like that. It says, right here, I don't know if you've heard of this, but President Donald Trump, he fired the chief labor statistician, and was criticized. So when he fired that person, right, Donald Trump was criticized by the predecessor of the person who he fired. That person who is criticizing him is someone that he put in. And they called it an unfounded move that will undermine confidence in key data set on the U.S. economy. What happened was we came out with some numbers, the unemployment numbers and all this, and Donald Trump doesn't like it. He doesn't like the numbers, and so he's saying fraud. It's wrong. There's something, and then he's removing someone to put someone else in there that's going to maybe put numbers that he wants. That is very dangerous. You're essentially saying, like, hey, we're gonna put someone that puts the numbers that we want. We're gonna lie. We're not gonna tell you the truth. Now what he's trying to say is, no, they're lying. So I've dealt with this before. People are gonna say something and they're gonna think that just by saying it makes it true. No. Him saying that the numbers are a lie or anything, that doesn't make it true. The numbers are wrong. The numbers have always been wrong because they have to adjust it. They don't know. It's so hard to figure this out every month. So it's like, but doing that is going to shake the market. That kind of stuff shakes the market. Say this is damaging. The person that's saying it is the person that Trump picked. Trump on Friday fired Erica. I can't even say the name. Hours after the labor market data showed weak job growth based on steep downward revisions for May and June. So again, they make revisions and they say, hey, in May and June, these were the actual numbers. We tried to get the correct numbers, but we can't get, it's all of America, right? It's a lot of people, so we're trying to figure out the numbers. They didn't get the right numbers, and so they're adjusting them, and Trump doesn't like that. Trump doesn't like the truth going out there because it's hurting his position as a candidate in his party. Says here, latest Trump tariffs unlikely to budge, top negotiator says. President Trump imposed last week on scores of countries are likely to stay in place rather than be cut as a part of continuing negotiations. Again, these tariffs aren't going anywhere. It's going to be a long negotiation. He has a fight with Powell. Now he's taking people out of the labor statistics. It's just going to be volatile for a little while. Wall Street banks lose ground in Europe as tariffs spook clients. One thing, this is nothing too crazy for me, but I don't like seeing things that are compared to 2022 or 2007, stuff like that, right? And right now, as you can see, more banks that are international are not, or the clients are not using a U.S. bank because of tariffs. Now, it hasn't gone up significantly, but it's moving up. So if we take a look at this maybe in October and it's continuing to move up, that might be a problem. I really quickly want to go over the chart of QQQ and what I think is going to happen. As you can see right here, we've gone up between these triangles. Right now we're currently on a 37, we were on a 37-day 6.5% move, and now we have dropped to a 38-day 2.7% move. I believe our market is going to stable off. I don't know if I can draw a line right now. I don't know where it is. Well, I'll do it later. I believe somewhere in this line, somewhere here, this is going to all be stabled off. We're going to boost from where we are. We're going to come up to about the Qs are going to hit the 570s, right? I think it's going to come up to the 570s by the end of August, sometime in September. We're going to hit 570. And then we're going to have a little bit of bump. October could provide a boost, but I think August is going to provide a little bit of a boost here, but then we're going to kind of just bounce around the 560s, somewhere around there. We're going to get up there eventually and then move up to 570 by the end of this month or into September. That's just my opinion, of course, but based on how all of these look, you have these big boosts, right? A big shot out of the park, and then it drops. And then you kind of go up, and you can still go down, right? But you kind of do this little stabilization, right? And then you go through something else, right? Over here, as you can see, we had a big pop, and we dropped, and we popped, and we actually stabled off because this was coming out of the 2022, right? And then we crashed here, and then we came right back up. So I believe, yes, we're having a little bit of this is not even technically a correction, but the market is correcting itself a little bit, and then we're going to push up for this next month and kind of stable off. I don't think we're in the middle of a crash. I do not think we're starting a new triangle at all, but I do believe it can bring some volatility with Trump and his tariffs and all of that. So if you like these videos, thank you for sticking around. I really wanted to make this video a lot shorter, and it always ends up being this long. So if you're still here for all my yip yapping, thank you. I appreciate it all. Yeah, please give a like and subscribe. It does a lot for the channel. Trying to grow it, trying to, I hope it helps people. And if it, I'm not definitely, I don't think I'm hurting anybody, but I want to help people understand the market a little bit and maybe make a cool financial decision. So yeah, if you like these videos, like and subscribe, and yeah, keep following my challenge. If you guys are doing a challenge or anything like that, I want to know. If you have any stocks that you are like, hey, I'm really excited, this thing can be a banger, let me know. I want to know about these things, and then I will look at the financials and look at everything because I want to know this stuff. So thank you for watching, and don't forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.